everyone, and welcome to our video on price action trading. In today's video, we will explore the concept of price action trading, its benefits, practical strategies, and common mistakes to avoid. So, what is price action trading? Simply put, price action trading is a strategy that focuses on analyzing and making trading decisions based solely on the price movement of an asset without relying on traditional indicators. Unlike technical indicators, which uses mathematical formulas, price action trading relies on interpreting the natural behavior of price itself. By observing patterns, trends, and support and resistance levels, traders can gain valuable insights into market dynamics. Price action trading enables traders to understand the psychology behind market movements. Let's take a look at an example. Here we have a strong upward trend. Price action traders would identify the pattern of higher highs and higher lows, indicating a bullish market sentiment. Without relying on indicators, they can spot potential entry and exit points, allowing for more precise and timely trades. So here we have an hourly chart of the S&P dating back to March 10th of 2023. And I'm going to remove this price channel. So over here on the left icon bar, we're going to click on price channel, and we'll start it just to pick out a few data points, and we can put it wherever we'd like that makes the most sense. What I like to do on these is once I have them, right click and click on settings, and we're going to check the box that says right ray to extend that out. So if we were bullish in this and we were using price action trading, we would look for potential entry points on the lower part of this upward price channel trend. So here we have where price hit the lower part on 324. And then coming down to a lower time frame, we can identify the same point in time and develop a trading entry and strategy based on that lower time frame. So here's the same date when price came down to this lower price channel. And, at that point, you just try to identify potential entries and exits. If we are a long-term trader and we're wanting to hold this until the upward part of this channel, we can identify an entry point here, set our stop maybe below the last point on this channel. And for that, we're going to come over here to price targets. We'll click on our entry and extend this up to the top of this channel, and we'll put our stop below the last low. And again, this is assuming that this trend is going to continue. We're continuing to make higher highs, higher lows. So this could be a logical area for a stop and a take profit. Now let's take a look at some of the benefits of price action trading. First, price action trading offers increased accuracy. By focusing on price movements, traders can make more informed decisions based on actual market conditions rather than relying on lagging indicators. Second, price action trading provides flexibility. Traders can adjust their strategies to fit various market conditions, making it adaptable to changing trends. And lastly, price action trading allows for improved risk management. By understanding price patterns, traders can better identify potential areas of support and resistance, enabling them to set more precise stop loss and take profit levels. Now let's take a look at some practical tips and strategies you can use in your own trading practices in regards to price action trading. Here we have a chart of the S&P. It's a 5-minute chart. Today's date is May 25th, 2023. And we can see price formed a little bit of support here, came up, and then traded through it. What happened here, though, is when we come down, price consolidated, made a new low, and then failed to make a new low here on the 1 minute, and then broke through this resistance right here and ultimately through the previous support. And now it's trading back up to the high side of this range area. But what I was looking at is, I like to use price action trading in conjunction with a footprint chart. It helps me view what orders are coming into the market, how those orders are being absorbed, whether it's on the bid side or the offer side. But we can see here that when price dipped below this support area, we started to see these red bars, which is these red bars show selling relative to the other bars in this time frame. So the more red the bar, there's more being sold at the market to the bid. The blue bars show more buying. So 520 here, that means 520 contracts were bought at the offer versus 287 sold at the bid at this particular price. But what we can see here is that as price came down, there was heavy red, and we saw the delta go negative 2,000, negative 1,200, but then we started to see it even out a little bit, and the delta went to positive, negative, and then we had a larger positive bar here. And when we zoom in down to the 1 minute, we can see as price came down, made a low, made a new low. At this point, it failed to make a low, but again, we're seeing the same pattern. Heavy selling on the first part of this little rounded area, and then ultimately that turns into buying, which led price to break up back through the previous support area. And then it came back down to test that support area, and again, didn't make a new low and bounced from that. And now we're trading back up to the portion of this range. So I don't have any lagging indicators on here. I strictly look at price action and how the orders are coming into the market and how those level 2 orders are reacting to those market orders. Tip number 2 is learn to identify candlestick patterns such as doji, engulfing, and pin bars. These patterns can signal potential trend reversals or continuation. Very easy to do within Optimus. Come up here to the top bar, click on the drop down candle for chart style, and change it to whatever you like. But I typically like to do candle on all my charts except for the footprint chart, which is data driven, and that is I have two styles of data: sell volume and buy volume. Tip number 3 is combine price action with other technical analysis tools such as trend lines and Fibonacci retracements to validate trading signals and enhance your decision-making process. I think with price action trading, the most valuable tools that I have found within Optimus Flow are the trend channel, rectangle box to identify support and resistance levels, and then just a standard trend line, and then horizontal line. If you don't have these on your toolbar, come over here to this little drawing indicator, click on it, and then you can favorite any tool that you like to use. So if we want to add Fibonacci Eclipse, favorite it, and then it'll show up here in your default view. Now let's take a look at some of the most common mistakes to be aware of when using price action trading. Mistake number 1, I would say, is overanalyzing. It's really easy to get caught up in analyzing every small price movement, especially when you have the dome up and you're looking at level 2 data and market orders in conjunction with a footprint chart. It can lead to indecision and missed trading opportunities. Remember, simplicity is key in price action trading. And I would say that it's also important, we did a video on multiple time frame analysis. It's important to keep your trading strategy in line with your overall view and bias of the market, which is why I always do a top-down chart analysis and continually remind myself where the market is most likely to go based on the bigger picture. It's just really easy to get caught up in these small price movements, especially with the smaller time frame charts. So that's important to remember. Mistake number 2 would be relying too heavily on indicators. While price action trading doesn't exclude the use of indicators altogether, relying solely on them can dilute the power of price analysis. Use indicators as supporting tools, not as the sole basis for your trades. And remember here that markets move because of buyers and sellers, not because of indicators. Indicators are always lagging. It can give you an idea and a reference point to reflect on when you have a bias and an opinion of where the market is going to go. But I have found that what's most helpful for me is looking at things like this. When price dips below support, does it really look like it's going to go, or all these orders being absorbed by the bid, which could indicate a price reversal? Mistake number 3 is acting impulsively. It's important to have a disciplined approach to price action trading. Avoid making impulsive decisions based on short-term price fluctuations. Instead, focus on the overall market context and wait for strong confirmation before entering or exiting trades. So, in conclusion, price action trading is a powerful approach that allows traders to understand the language of the market through analyzing price movements. By focusing on price patterns, support and resistance levels, and candlestick formations, traders can make more accurate and adaptable trading decisions. Remember the key takeaways from this video. Price action trading offers increased accuracy, flexibility, and adaptability. Combine it with other technical analysis tools for a comprehensive trading approach. I hope you enjoyed this video. If you have further questions, please visit us at optimusfutures.com.